This is Thrivenomics, presented by Thrive Mortgage. Well, hey, everybody out there. Thanks for tuning in. This is episode 1 of season 3 of Thrivenomics, and could not be more thrilled to be sitting back in the host chair again. We're doing things a little bit different just for this for this initial episode of season 3. I am flying solo right now, so I'm in the North Austin studio all by myself recording this. But I wanted to bring you just kind of a compilation of some other interviews that I had the pleasure of doing a couple weeks ago at our annual company summit. We just hosted our annual summit just back at the beginning of February, and had a great time. It was so great seeing so many fellow Thrivers and seeing all of Thrive Nation gathering together, especially after the last couple of years. Man, it has just been a drag. Last year, we didn't get to do an in-person summit for obvious reasons. This year, things are improving pretty well in most parts of the country, and especially in Central Texas. So we were able to get together, and 325 some odd of our closest friends all flocked to the Kalahari Resort in Round Rock, Texas. And we got to have a great time celebrating together, celebrating the successes of 2021, and looking forward to what was coming what is coming in 2022. And so it was a great time had by all, and everything went off really, really well. Everybody had a wonderful time. But what was particularly interesting was the fact that we were able to bring in a number of our great partnerships that we have within the company, because obviously a company like Thrive would not be able to do everything that we're capable of doing and serving our clients without our very valued partnerships. So wanted to share just kind of a little tidbit of some of those interviews with you, and just to kind of give you a sense of the kind of companies that we partner with. And I really wanted to hear from them and from their perspective of what they do, what their company does, or what their platform does that really seeks to enhance the consumer experience. So it's an opportunity for those of you who are past Thrive clients. Then you have had some level of engagement with every single one of these partners that I'm about to play the interviews of. So I wanted to, as our regular listeners are already aware, this podcast is geared towards consumer and stories that we feel would be interesting to consumers, and special interest stories and things that you want to hear. And this is just an extension of that. This is a chance for some of our partners who don't always have the opportunity to engage with our consumers. This is an opportunity for you to hear directly from them on what it is that they provide to us as far as either tools or capability or services or a platform, as I mentioned before. So we're going to jump into things real quick, and I'm just going to kind of work through these interviews. I'll do a little bit of teeing up of the interview, just to introduce who the person is that I'm interviewing, as well as who the company that they represent, and kind of what that partnership with that company looks like here at Thrive. So the first one that I'm going to start off with is a gentleman named Calvin Mann. Calvin is a founding partner of Black, Manning & Graham. They are actually the attorneys. So if you haven't had a closing anytime with Thrive Mortgage in the last, let's say probably 10 or 12 years, then chances are good that the documents that you signed at your closing appointment, whether it was with a pen and paper, or whether it was an e-closing and you signed on your phone by just tapping a couple of icons, then chances are good that document that you were signing was produced by one of their attorneys. So Black, Manning & Graham is a great law firm. They prepare all of our closing document packages, or the vast majority of them for sure. And we've been a longstanding partner of theirs for many, many years. And it was so great to hear from Calvin Mann. And he's actually, he kind of jokes around a little bit during this interview, but it's actually when the camera's not running and you're just having a one-on-one conversation with him, he's one of the funniest attorneys I think I've ever met in my life. And they're not exactly known for their sense of humor, are they? So anyway, well, let me go ahead and tee up Calvin Mann from Black, Manning & Graham, founding partner, and let's hear what he has to say. Hi, I'm sitting here with Calvin Mann, founding partner of Black, Manning & Graham. That Black, Manning & Graham has been a long-standing partner of Thrive's for many, many years, and we absolutely value their partnership and treasure what they do for us. So, Calvin, how would you describe the primary function that your firm serves for Thrive Mortgage?
Well, good morning. Thank you for the opportunity to speak. Blackman & Graham has represented Thrive in one iteration or another since 2010. Our core competency is basically threefold. Number one, we prepare loan documents for residential mortgage transactions as well as commercial. We draw what's called agency paper, Fannie, Freddie, Govie, in all 50 states and in the District of Columbia. In addition to our document production, we also provide the associated regulatory compliance advice, both state and federal, that would impact a particular loan transaction. Thirdly, we also provide fulfillment services. In effect, operate as the back-end shop for some lenders where we do the closing and funding and shipping piece.
So as far as the consumer is concerned, obviously you are representing Thrive Mortgage in the transaction. You're not representing the consumer, but what does the consumer need to know about how having a partner, having an attorney performing this service for us, how is that protecting them?
They are, in effect, an indirect beneficiary of our efforts. Our responsibility is for our lender. When we represent the mortgagee or lender, we cannot ethically represent the consumer.
Sure.
But when I say they're an indirect beneficiary, the due diligence that we apply on a given loan, such as reviewing the commitment for title insurance, reviewing the survey for anomalies that are not going to pass muster from an overlay perspective for sale in the secondary market, we're going to see that those things are cleaned up. So when we get a loan closed and we get it funded, it's going to be a loan suitable for sale. It's going to be clear of those adverse anomalies.
Right.
And while, again, we can't directly represent the consumer, they're getting the benefit of our due diligence on behalf of the lender.
In your experience, what are some of the most critical things for homeowners to know about their rights, whether it's home ownership in Texas or any of the states where you all are licensed?
Well, we're dealing with the primary residence.
Sure.
Obviously, our Thrive Mortgage is involved in second home lending and in investment property lending, but the primary focus is on owner-occupied primary residences. And some consumers may not realize that, for example, in Texas, since that's where we are today, you have a possessory right of a property when it's your primary residence. And that would be regardless of whether or not you're entitled, regardless whether or not you're going to be a borrower on that loan transaction. You have that vested right. It's constitutionally vested. It cannot be waived. It can only be encumbered. And by encumbered, I mean that spouse would be required to sign the security instrument to encumber that homestead right, such that if there were a monetary default, we had to move forward for loss mitigation and foreclose on the property, we would have that interest accounted for, and it wouldn't forestall the sale.
Gotcha. So let's say that response right there kind of triggered something in the mind of one of our listeners. Where's the best place that they can go for those kinds of answers? Do they need to reach out to an attorney, a law firm like yours, or is there another avenue for them to seek more information?
Well, you have to realize that law firms like ours, we concentrate on representation of mortgage lenders. It's
right.
Some 300 the last time I counted. So we typically don't take calls directly from consumers.
Sure.
If it is adjacent to a loan and they had a question, I can answer a question for them. But if they need particular advice, then that would need to come from their own counsel. There's a myriad of ways to access that. The local chapters of the State Bar of Texas, like for example the Houston Bar Association, has a lawyer referral service that they could reach out to if they don't have benefit of counsel already.
Sure.
So there's a multitude of resources that are accessible to them. And obviously we would always encourage them that if they felt they had legal questions that needed to be addressed, that they would reach out to their counsel or to one of the referring agencies through the bar associations if they didn't already have existing counsel.
Excellent. Well, Calvin, it's a pleasure having you here at Summit, and thank you so much for the wise counsel over the years and for all you do for us. We really appreciate the partnership.
James, thank you. It's been a privilege and an honor to work with Thrive Mortgage over the years, we don't look at this as exclusively an attorney-client relationship. I've always felt like these are partnerships in the truest sense of the word, and I can't think of a better partner to have than Thrive Mortgage.
Well said. We appreciate that. Thank you, sir.
Thank you.
Well, that was a great interview from Calvin. It was really good getting to just get to know him a little bit better and just kind of asking him some questions about how consumers can engage with attorneys and the valuable component or the valuable role that firms like Blackman and Graham play in our industry, and how they are protecting the homeowner, they're protecting the lender, they're protecting the title company. They're basically just the protectors of the process to make sure that everything is being handled. Because if they weren't doing their job properly and something got missed at the closing appointment, then you, the homeowner, might be stuck with some lien that you didn't even know got put on the house. So everything that they do is definitely tailored to making sure that it is as smooth and seamless a process as possible. So we really appreciate them showing up and being sponsors with us. The next interview that I'm going to go to is a woman that I have had the pleasure of working with extensively over the last several years, at least since I've taken over, since I've been the director of marketing for Thrive Mortgage. Her name is Tina Bradford. She is a client success rep with a company called Mortgage Coach. And if you are a client of Thrive, then you're familiar with Mortgage Coach, because chances are good you worked with a loan officer who prepared something for you called a total cost analysis. And their platform is unparalleled in its ability to kind of lay out multiple different scenarios for you side by side and let you make a vastly more educated assessment of what the best loan strategy is for you. So we love Mortgage Coach. We love working with them. We love Dave Savage and the team that he's got over there. And Tina was on hand to conduct this interview with me, and she kind of gets into a little bit of the details of how the Mortgage Coach platform and how a total cost analysis really adds so much value to the process for our borrowers and for clients who use Thrive. So let's tune in and hear what Tina has to say. Hello again. I am sitting here with Tina Bradford. Tina is joining us here at Summit 2022, making waves from the great company of Mortgage Coach. Mortgage Coach has been a very long-standing partner of Thrive's, and they provide a platform that a lot of our loan officers take great advantage of in educating their consumers and educating their clients. So, Tina, start off by telling us kind of your role at Mortgage Coach, and then you can go ahead and talk about how wonderful a relationship you have with Thrive.
Okay, so at Mortgage Coach, what I really do is I go in and I teach the loan officers how to use the technology and make sure that it is set up in a way that for you as the consumers, you can digest what options you have as loan options. Meaning you might be looking at different products. Maybe you're looking at paying points, or you're looking at not paying points, or an FHA versus a conventional loan. What are those true differences? Thrive has been fabulous with their loan officers to be able to pull it in to make sure that they're educating you. So they're not just throwing out an interest rate. They're not just giving you, here's the closing costs. They're actually educating you on, here is why, even though this might not look like the best option up front, you want to keep this loan 6 to 7 years, this is going to be your better option, and this is the reason why. And they're looking at that savings aspect, and they're looking at your time frames to really be able to come in and show you as the client where those little missing spots that most loan officers don't educate you on, where those are.
Let's dig into like the report that the consumer actually sees. Mm-hmm. What is it that gives a few more details on how it actually goes through the process of educating the client?
So what you receive is, we call it a total cost analysis. Your loan officer can call it any other type of presentation, but the important aspect of it, it's broken into 4 sections. That first section that it has on there, that's the summary section. That's going to give you the basis of the loan. It's going to tell you how much you're going to be taking out. It's going to tell you the interest rate, even the APR, which is what those extra fees added to the interest rate that you have to pay to close that loan. It's going to give you your payments. And then you have a more information button in each section that breaks it down too. But I'm going to go ahead and go over to the right side of the screen, which would be 3 graphs. Those graphs are going to compare the actual payments together. So which one is going to be more expensive or least expensive? it's going to compare the actual cost of the loan. So I'm looking at the interest in MI plus the closing cost. I'm not taking in any consideration of the assets that are being built, because you're building equity when you buy a home. You're not losing that money as if you were renting. And then the last one, they're going to show the total balances at a long term. So maybe how much net worth you're going to have, how much you're going to pay in total principal. And then again, there's a more information where you can really dive deep into those numbers to figure out which of those loan options is going to be best.
Excellent. I mean, one of the things I love about Mortgage Coach so much is how powerful a tool it is in educating the client. There have been any number of loan officer stories that they've shared with me about how they used a TCA or again, whatever they choose to refer to the report as, and they've used it to not just win deals, but to help their client feel much more secure about the decision that they were making. Because what clients really need to understand is that they are the ones who are in control in deciding what the best loan strategy is for them. And if they are working with a loan officer who, it doesn't matter if it's a guy down the street or a gal down the street or an online call center, doesn't matter who they're working with, if they're not taking the time to fully educate them on all of their available options and what the best loan strategy is for them long term, they're shortchanging those consumers.
Actually, I completely agree. And the other aspect of it is there's other options they can show.
Sure.
They can show a refinance option. And in today's market, we know a lot of people out there have a lot of high interest debt. And that thought of rolling it into your mortgage can sometimes be scary, but they can give you a true picture of, is it going to benefit you? Is it going to save you money? Is it going to make it so you have more money each month to either invest or to even be able to do the things that you want to do in order to build your net worth or accomplish your life dreams? Because you're not paying those credit cards $500-$600 a month. That money's now rolled into your loan. You're paying $100-$200 more on the loan,
right,
but you have that extra income that you otherwise wouldn't have had.
Yep, exactly right. And I get story after story of loan officer who tells me that a mortgage coach, total cost analysis in the hands of their client is really what tipped the scales in their favor and helped them develop a much deeper relationship with that client. And not just the client, but also whoever the client is working with, their financial planner, their tax advisor, their realtor. I mean, there are so many different things. I actually heard one story about a consumer who received a total cost analysis and was also shopping this particular loan officer against a large big bank and then a community bank, both of whom had lower interest rates than what our loan officer was quoting. But this loan officer knew that those two quotes were totally inaccurate and they weren't telling the full story.
Yep.
And the total cost analysis did. And so this particular consumer sent the link to the report to a friend of his who's a broker out in Arizona. And this broker out in Arizona said, you are an absolute fool to the nth degree if you do not use that loan officer from Thrive. They are doing what the top 5% of all loan officers in the country are doing. And it's largely a benefit to us having access to this platform. So what do you think is there anything that's on the horizon in terms of the consumer experience with either a total cost analysis or any of the other many reports that you guys help loan officers provide to their clients?
Absolutely. I think, a huge aspect that comes into play with Mortgage Coach is that we at Mortgage Coach, we are all about educating the borrower.
Right.
We are really not as interested in the loan officer, to be honest. We believe everyone deserves a TCA because so many years we have thrown out just an interest rate and, closing cost at clients without really them understanding what they're jumping into.
Yeah.
And so Mortgage Coach is going to be that aspect that brings in the educational aspect for you. I've had people go, I didn't really understand a loan until I saw Mortgage Coach. But there's a lot of aspects that you can, as a borrower, what if I want to move up into a bigger house? I have equity in my home. What if I leverage that equity as a down payment?
Right.
The limitations of Mortgage Coach is based on the limitations of your loan officer.
Yeah.
There's really not limitations on what they can show in Mortgage Coach. It's just the limitations. And if you're not receiving a Mortgage Coach, from a loan officer, go find a loan officer that will take that time to build it out and show you a TCA.
Absolutely.
Because you deserve it.
Absolutely. Yep. And I mean, this is too big a decision to just go off of a loan estimate. This is something where you really, I mean, for most people, this is the largest financial decision that they will make at one point, whether it's the first home that they bought or a move-up home or they're downsizing, whatever. It's too big a financial decision to just leave it to, well, he said I should go with that loan and let's call it good.
Absolutely, I agree. You know, when I bought my house, my loan officer didn't have a mortgage coach, but fortunately, I'm a little lucky because I work there.
Yep.
And even me, as someone who is very comfortable not only understanding but teaching loans, there's things that I looked at that I was like, wow, that's interesting. That's something that I can look at because I knew what my goals were in order for me to accomplish building that net worth that I want to do, because let's be real, I've only worked 10 years. I don't have a huge retirement. I had to figure out some other way to get there.
Right.
And this is the tool that I was able to look at and say, hey, this is how I can be able to retire comfortably.
And leverage it, yeah.
So
absolutely.
Even me as an employee, I see the benefit. I want people to have mortgage coach because I'm excited about it. I see how it benefited me.
Yep, absolutely. Well, Tina, it's been a pleasure having you here at Summit. I know this is not your first one. You've been involved with us for a few years in the past, but so happy to get to see you face to face again, and thank you for all of your support and everything you do for Thrive. We love our partnership with you guys, and are so happy to be that you're a part of this.
Absolutely, thanks for having me. And you guys, the culture of Thrive is amazing. You know, the culture of it's amazing because not only do you guys want to educate your borrowers, but you guys want to educate each other and always make each other better. And so thank you for raising the bar for expectations for loan officers.
Absolutely. Happy to do it.
Yep.
All right.
Thanks.
Well, welcome back. I hope you enjoyed that little segment with Tina. She does a great job helping us stay on top of all the latest changes with the Mortgage Coach platform and making sure that we're educated on all the cool tricks and tools and everything that's related to building out those wonderful total cost analyses reports for you. And I'm going to move on now, and you'll probably start noticing a trend that as I progress through this, through these interviews, then you're going to start realizing that the more people that I talk to, it's kind of about the same. It's kind of the same pattern in the same order that you would experience them as a consumer of Thrive Mortgage. So I'm going to move next to my interview with JB Manning. JB is basically our account manager for a company called Credit Plus. And if you've applied for a mortgage with Thrive Mortgage and we pulled your credit, then it more than likely that credit pull went through Credit Plus. Well, actually, I can assure you that it went through Credit Plus because they are the only provider of the credit reports that we pull. So we've been we've been partners with Credit Plus for a very long time. They do a fantastic job for us. We love working with them. We especially love JB. He's a great guy, and as always, just kind of Johnny on the spot whenever we've got issues or anything that arises. If we have some questions or or any of our loan officers need some training assistance, he's always quick with a resource and helping us out however we need. So love talking with JB and love working with Credit Plus. They're a great partner. And so JB and I had kind of an interesting conversation about things that you might find actually very interesting related to credit reporting and the differences between the different credit scoring models, and the fact that there's so much misinformation out there about how to properly manage your credit and where to go for various resources so that you can do some due diligence of your own and figure out what people what some of these companies are reporting about you, and then also how to take steps to clean that up. So take a listen to this. It's about 9 or 10 minutes long, and JB does a wonderful job just kind of educating from a consumer education standpoint and making sure that he's giving you some great information. So tune into this, and I'll be back in just a few minutes. Well, hey again, folks. I am sitting here with JB Manning. JB is give us your title, JB.
I'm a national account manager.
With
Credit Plus.
There you go. So Credit Plus is, for those of you unaware of who Credit Plus is, would basically, if you've ever applied for any kind of credit, chances are good that Credit Plus was the company that was behind the actual credit pull. So they are what's known as a CRA, which stands for
Credit Reporting Association.
Association, not agency.
Right.
Okay, cool. So basically they are kind of a clearinghouse. Like you've probably heard of TransUnion, Equifax, Experian, things, places like that. Credit Plus is the solution for lenders like Thrive to go get that tri-merge credit report that has all of the dirty secrets from your recent history and sometimes distant history, but they're the ones providing us that tells a little bit more of the financial story of what's going on with every borrower that we do business with. So the reason why we want to have JB on is because there's a lot of things that consumers are really woefully uneducated about when it comes to consumer credit reporting. You and I have had a couple of conversations about some of those things. So knowing that the audience of this podcast is predominantly consumers, what would you say are the biggest misses that consumers have in regards to either managing their credit profile or understanding what remedies they have when they see something wrong, anything of that nature?
So specifically in the mortgage space, there is a big misconception about what credit score models are used. Everyone is familiar with Credit Sesame, Credit Karma. The credit score that you get when you get your free credit report from those companies, the score model is not the same model that's used in the mortgage industry. Fannie Mae, the GSEs have a very specific set of score models that they make the mortgage industry use, and so oftentimes people will get their Credit Karma report and see that credit score. They'll go apply for a mortgage loan, and the mortgage company comes back with a different credit score, and there's a lot of confusion about that. Secondly is that a lot of consumers don't know that you can get a free copy of your credit report every year. Gosh, I'm trying to think of the name of the
annualcreditreport.com.
Annualcreditreport.com.
Yep.
Thanks.
We'll clip that a little
camera, and you got me thinking.
Nope.
Yes, annualcreditreport.com. And so that used to be a free credit report once a year, right? Now you can get a free credit report weekly from those guys.
Nice.
So if you're really interested in making sure your credit is good, you can do it there, as well as with the Credit Karma and Credit Sesame. But the better place to do it is at annualcreditreport.com. Those straight from the bureaus. And if you've got mistakes on there, you can dispute it right there with those.
One of the things that I always educate consumers or clients that I'm working with about going to that website is that I tell them it's just the report. It's not the score. And so because that's something that that they need to know, because a lot of them will go there, and if I don't tell them that, they'll go there and they'll be flipping through all the pages like, well, where's my score?
Right.
Well, there's a difference between a credit report and a credit score. There are literally dozens of scoring models out there.
That's true.
But predominantly in the mortgage industry, we're using which one?
Man, again, you put me on the spot. FICO 4, I believe, for Experian. I think Beacon 5 for Equifax, and TU version 2, I believe. I'm not sure. I'd have to.
No, I think you're right on that. You didn't know this was going to be a quiz show, did you?
Yeah, I did.
No, I mean, it's really important that people understand the distinction between a credit report and a credit score. Credit report is just, how would you define a credit report?
A credit report is just a snapshot of your credit history today. That's all it is. It is just like a snapshot. Now, 2 or 3 years ago, the bureaus started using what's called trended credit data.
Right.
And that is more like a photo album. So it gives you how you've been paying your bills. Are you just making your minimum monthly payments?
Right.
Are you paying off your accounts every month? Or every month? Are you a transactor? Or are you a revolver?
Right.
And so that still goes into the equation for approvals, but that's really what a credit report is. It's just a reflection of how you're taking care of your obligations for your credit.
Absolutely. All right, very cool. And the credit score, as we were just talking about, is based on the various different scoring models that are out there. So like us in the lending industry, we're predominantly going to be using the FICO scoring model, as opposed to the Vantage scoring model, which is what a lot of online, like a lot of the free online, like Credit Karma, for instance, that's the Vantage score. And when you pull up your bank, your online banking app, that's more than likely going to be your Vantage score.
True.
And so that goes back to what you were saying, how it's very, very important to know what scoring model is being used to determine your creditworthiness regarding whatever loan it is that you're applying for, because we don't use the Vantage score, and there's often that discrepancy between, just because the different scoring models weight different factors differently.
That's
and
true.
Consider those variables. So what are some of the variables that go into any scoring model?
Oh man, so weighted balances on your accounts is one of the main things. If you have a bunch of revolving credit accounts, try to keep your balances under a 35% threshold.
Right.
So, if you could spread that out, your credit score will go up. The length of time that you've had credit is also baked into that equation.
Right.
The number of accounts you have, and of course the biggest one is whether or not you make timely payments. That is it. And you talked about Fair Isaac, that's what FICO stands for. It's a Fair Isaac company. Vantage score is owned by the bureaus.
Right.
And in the legislative arena, there is a big conversation about whether the mortgage industry is going to stick with the FICO model or switch over to the Vantage model.
Right.
They obviously have a vested interest because they own it, but that's also something that is kind of on the horizon.
It cracks me up that that's even a conversation, to be honest with you. Just thinking about it from a lender's perspective, because the scoring model is irrelevant, because what's really relevant is what do the guidelines say.
Yeah.
And if the guidelines move from one scoring model to another, then the guidelines are just going to change the threshold.
You're
and right. And so it's kind of, you're not really getting a trade-off. But it's kind of one of those, maybe this shouldn't be mentioned, but it's kind of one of those follow the money things. Because you mentioned the Vantage score is owned by the ones providing all the records.
It is a follow the money.
So it's just kind of, and from a mortgage lender's perspective, I really don't care what scoring model is being used. I only care what the scoring model says as compared to the guidelines.
Right.
Because that's what I have to follow.
Yeah, you got
it. It always makes for very interesting conversations. So it's always, whenever I'm dealing with a client, especially if that becomes an issue where they say, oh, I've got fine credit. Okay, what are you basing that on? And then we have to educate them on, okay, this is here. Let me level set the expectations for you. But it's always great having a credit industry expert on the call to kind of help set the record straight. So, what do you think? What's one? If you were talking to somebody out there and they said, I'm thinking of getting a mortgage, and they say, what should I know about credit reporting that we haven't discussed? What would you say is that one extra next thing, top thing that they need to know?
Just pull your credit report. Get your free copy before you apply.
Mm-hmm.
A lot of times people will have a $50 medical collection.
Yeah.
You think your insurance paid it. You're not even aware of it. They may not mail you any notices about it, that you even owe this bill.
Right.
All of a sudden, you're applying for a mortgage, and now and especially if you're making offers and you're on a tight timeline, it can really throw a wrench into things. So I would just say, pull your credit report at least once a year, and before any big transaction.
Right.
Definitely pull it. Just
Absolutely.
to make sure you know where you are.
That is very sound advice, because the fewer surprises there are when you go into that process, the better, the more confident you'll be able to make a solid decision, because you'll know it'll be, you know all the factors that it's going to be based on.
Yeah, that's true.
Absolutely. Well, JB, thank you very much for taking time.
Right,
appreciate you coming to Summit.
Thank you. Thanks for the invite. We
Absolutely.
had a great time.
We did too. Well, hopefully you found that little segment with JB Manning of Credit Plus educational. At the very least, hopefully you learned a little something that you didn't already know about credit reporting, about how credit reports work, how the information is pulled, what kind of information is being gathered, all of that good stuff. So hopefully you learned a little something. Well, I want to transition now to a guy named Joe Davis. Joe is with a company called SimpleNexus. And if you have downloaded our iThrive app to your smartphone, then you have experienced SimpleNexus's platform, and hopefully you felt like you had a really, really engaging and really good experience in using that iThrive app. So SimpleNexus is the platform that is powering that iThrive app, and SimpleNexus is a fantastic partner of ours. We have absolutely loved being hooked up with them. And I mean, iThrive app was pretty much a game changer. So we call it iThrive; they'll call it their SimpleNexus point of sale system. But we wanted to white label it because saying iThrive is a whole lot easier than the other thing that I just listed. But anyway, Joe's a great guy. Had a really good time talking to him. He's really keen on how SimpleNexus has developed the platform that makes the mortgage application process so much easier for the homeowner or for the prospective homeowner. And so let's take a listen and just kind of hear a little bit more about their platform. What was it that motivated them to design it the way that they did, and how it can really enhance and benefit you going through that mortgage loan application process. Hey folks, I'm sitting here with Joe Davis from SimpleNexus. Joe, how are you doing today? First of all, what's your title?
I'm a Client Success Manager with SimpleNexus.
Client Success Manager with SimpleNexus. So let's talk about SimpleNexus and what their platform does for Thrive and for you.
Yeah, sure. I can definitely unpack that. So, one, I've been in the industry myself for 20 years, so I definitely know how it is to be a consumer, let alone a mortgage broker. One of the biggest drawbacks about getting a mortgage is meeting face-to-face and having to bring in a stack of docs,
Right.
not knowing what docs is needed. What to expect the unexpected as a consumer, which is very threatening.
Right.
What's so unassumable about using iThrive is the fact that it can be done on your handset.
Mm-hmm.
Almost everyone has a smartphone, and what's great about it, you can completely have a full conversation with your loan officer. You can submit your loan application on a couch or wherever you are, as long as you have connection to the internet,
Right.
within the United States, unless you have VPN anywhere in the world.
Right.
The other part is you can also safely and securely upload all of your supporting documents that's needed. The application also give you a queue of things that you would need after you're submitting your application. This way, you're not guessing or scrambling on what he or she needs. I think it's the convenience factor.
Yeah.
Is what people love about it. It's again, it's not threatening. It's very casual, and it feels comfortable because everyone uses their smartphones in whatever form or fashion. Right, they'd be taking pictures, playing on Facebook.
Mm-hmm.
It's very innate, if that makes sense.
Oh, absolutely. I mean, you walk around, see any sizable crowd of any note, and you're gonna see 2/3 of the people, if not more than that, with doing some screen time.
Right. Absolutely.
So the more that we can leverage technology in order to get the information in front of the client, the better. So what do you feel are some of the most important benefits that your platform provides? I love the fact that they can upload documentation. I love the fact that we have so many integrations with so many other pieces of technology. What's your favorite component of the platform that you guys provide?
There's a lot. I'm a bit biased, so forgive me. But
List them out.
Well, sure. On the simplistic side, one, you can share the app with anyone.
Yeah.
Anyone who has a smartphone. It doesn't have to be the loan officer. It doesn't have to be the realtor. It could be the borrower. The borrower say, you know what, Dad? I think you need to do a mortgage. Here, fill this out. You know what, Mom? It's probably time for you to do a reverse mortgage because you do need that extra money.
Yeah.
Fill this out. The other part would be not just so much that you don't have to pick up the phone with your loan officer or realtor and see where you're at in the process. So you have these milestone stages that you have throughout the full, let's say, loan process or life cycle of the loan,
Right.
where you always know where you're at, whether you're approved or seeing a processor or an underwriting, getting your final documents. Speaking of final documents, all your disclosures is on your phone. You sign all your documents. You're not putting everything in a FedEx package and some nefarious way is going someplace, and hopefully it goes to the right guy, or that FedEx truck doesn't fall off the side of a mountain with all your personal documents. The other thing is we also have remote online notary on your phone. So there's I mean, imagine doing everything in the comforts of your room without the scariness of walking, into a bank, and and it's very inconvenient. I mean, you can do it on your lunch break. It's convenience for me is great. If you can order food through your phone, why not push button
Get
mortgage?
Exactly. Yeah, I think some other mortgage company might have coined that phrase, but
I apologize.
No, you're good, because we're the first ones to actually turn that into reality. Because I'm really glad that you brought up the online notarization, because that's been from my perspective, on the lending side of things, that has been my most, not really jaw-dropping moment, but that's been the biggest fist pump that I got was when we, a couple months ago, launched that capability so that our clients can do everything from the initial application to document upload to tracking through the workflow to actually conducting the closing appointment all through the same application.
Well, here's the crazy part. I mean, how many people love going to closing, signing 300 documents with a
title agents do.
And they love it. They love it. And you know what? And I'm glad you said a title agency. I know this is supposed to be a consumer-friendly part. A lot of title agency thinking that the remote online notary is replacing them. It's not. It
Absolutely.
is a tool. It's
Great
to
point.
help them close more deals in a day, and otherwise they couldn't do it. If you have one notary in one office, that's maybe only 8 deals you can close.
Mm-hmm.
Through Thrive, you can have 34.
Exactly. Multiply that by 4 or 5.
Who makes more money?
Exactly. Yeah. That's some good thing. I've actually had that conversation with title agents before when they were kind of lamenting the whole remote online notarization process and saying it's going to put me out of business. I said, what are you talking about? It's going to maximize your effectiveness. And would you rather do one closing an hour or 5?
Yes.
So once that clued in, they're like, oh, hey, I'm a big fan right now.
yeah, let's go Thrive.
Let's go. Let's do it, Thrive. So excellent. Well, Joe, it's been an absolute pleasure having you here. I'm glad that you got to come join us with for Summit and be present for everything, and very happy to have this partnership with SimpleNexus.
No, I appreciate it. I definitely want to ride the wave with you guys. This has been an awesome experience. I've been to a lot of summits, and I kid you not, the energy here is just magnetic. Like everyone just is all part of this one cohesive unit going forward. So I'm glad we're part of your spirit of technology.
Absolutely.
Let's just keep pushing this thing forward.
Absolutely, man. All right, appreciate you coming.
Likewise.
Thanks, man.
Thanks.
And welcome back. I hope you enjoyed that little segment with Joe. He's, like I said, he's a great guy, and just really enjoyed that conversation with him. So now that we've talked about pulling your credit, we've talked about strategizing with you about the right loan tools. We've talked about how the platform that we have with how you can apply. Now let's talk about what happens after the transaction is done. So the next segment that I'm going to have up is a conversation that I had with a gentleman named Scott Fouser. Scott is currently CFO of a company called Househappy, and it's basically he started the platform, and then his company that he originally started was purchased and became the company that we now know as Househappy. So really, really smart guy, knows a lot about technology. And the reason why we partnered with Househappy is because of the service that they provide after the transaction is over. And one of the biggest, obviously, if you think about buying a home and becoming a homeowner, it's one of the single largest transactions that you will engage in at any point in your life. And chances are good you're probably going to do it multiple times through the course of your life. But Househappy is a platform that we provide to all of our clients who use Thrive as their financer. And we provide it free. It's free to the consumer to use. The reason why we provide it is because of all the extra value that Househappy brings to the process of being a homeowner. And I'm going to let Scott get into the platform, into describing the platform a little bit, but I think you'll catch on pretty quick as to why we felt like this was such a valuable benefit for us to be able to provide to our clients. And if you are a client of Thrive's, then you've probably received some of their emails. Hopefully you signed up for their service so that you can keep close tabs on all the maintenance requirements and needs of your home. So anyway, here's Scott to talk a little bit more about Househappy. Well, hello again. I am sitting here with Scott Fouser, CEO or CRO, Chief Revenue Officer and founder of Househappy. And if you are a past client of Thrive, then you should already be familiar with Househappy because you've been getting emails. Probably started getting them right about the time that you were getting ready for your closing, and then started getting them after the closing. Househappy is a platform that we engage with at Thrive, that we basically are providing this gift to our valued clients and making sure that they have access to it. So, Scott, why don't you give us a little background as to what Househappy is and how it benefits the homeowner?
Perfect. Yeah, Househappy is really designed to help people take care of the largest investment that most of them will ever make.
Sure.
It's a tool that provides a dashboard of all the home data, gives them access to things like filter sizes and paint colors and room sizes and model numbers of HVAC units and everything that really allows, fridge, everything that allows the homeowner to either, if they're a DIYer, to have access to that information to get their own filters, or if they like to have help with everything, then they have a one-touch solution to get a concierge to help facilitate that process. And what I mean by concierge is they literally have their own personal home assistant, a physical human, if they want to have that experience, or they can just press a button, and if they'd rather have that experience, a lot of times it depends on what they want to have done. And candidly, the same person might, depending on, if they want their kitchen remodeled versus they want their gutters cleaned, it might be a different experience, right? Somebody wants to talk and go through the details and make sure they feel comfortable, as opposed to, I don't have time to deal with this myself, so I'm pushing the button and getting it done. The other side of it is, if you have under the service reminders, for example, that we send out to remind people of things that are supposed to be done, they can use it as a DIY reminder and set it in their calendar and then get a pop-up reminder of when it should be done again. And so there's some real functional value in taking care of your house, because you know that if you don't take care of it, at some point that's going to catch up to you. And so this is an investment. We look at this as an investment vehicle to make sure that you're continuing to increase the value of and protect your equity, and take care of your home, and to give you time, frankly, for the other stuff in your life that might be more important to you.
So, is there a way or a reason for the client to want to establish a relationship with Househappy outside of the relationship with the realtor or the lender, or is that kind of the impetus of where that relationship begins?
There's more reason. I mean, you can go up to the Househappy website and sign up, but you don't get all the benefits that you would through the relationship with your realtor or your lender. And so and you'd have to pay for it. So there's that. But I mean, most people, 99.9% of all people using Househappy are associated with
Heard about it from their
lender or their real estate agent.
Got it.
Yep.
That's cool. So when it comes to the actual signing up, like, what is the client actually signing up for? Is it something they have to pay for? Is it an ongoing service? Is it a subscription?
If they get it as a gift through their lender, then all the services are covered. I mean, all the services of Househappy are covered. All they have to pay for is if they order a gutter cleaning, window washing, kitchen remodel, whatever, they just use those service providers and they pay them.
Cool.
They actually pay through our system, which kind of insulates them a little bit. And then we always serve as their advocate as well, because it is home services. And even the best contractors will have moments of weakness where they hired somebody new or whatever and they didn't do maybe what was expected of them, and then we become their advocate to resolve that. So
that's a cool component, and that's something that not a lot of those platforms that are basically more just like referral services of hey, let me connect you with 5 plumbers in your area. You guys actually step in and will act as you put it, an advocate or a mediator between the homeowner and the contractor. So there's some level of accountability there
for sure
for the contractor, which is huge.
Yeah, it's massive. And then the other part of it is it's really important to note that we are not like the names that out there in the lead aggregation and lead sale business. We're not selling leads. We don't get our service request and then put it out to the internet and sell that information of that customer. And then that customer starts getting their phone blowing up about, hey, it's, I'm calling about the job and it might not even be the right fit.
Yeah.
And so we purposely designed it to
Is it more like eHarmony for contractors?
It's matching, right? And the reality of it is, if you have a rental house and your tenant moves out and you want the unit painted, typically that's a fast and cheap that you want. You just bought $1 million house and you're going to live there for 10 years. You want a different contractor. And so we match that in a real authentic way.
Cool.
And put the power back into the hands of the service. Of the customer who's requested the service.
Right.
So they get in their app, in their dashboard, they'll get bids coming back to them, and the bid might be a hard price, or the bid might be we really need more information. We'd like to do a site visit.
Yeah.
And the homeowner gets to decide who they engage with and who they ignore. They can either accept or reject a bid, or accept the site visit. So that's a very different experience than what else exists out in the market.
So let's suppose that a consumer is working with a loan officer. They are one of the things that I find very, very cool is that if the loan officer or the realtor that they're working with is associated with Househappy and they educate the consumer early enough in the transaction, the consumer actually has the opportunity to utilize y'all's services before the transaction's even done. It doesn't don't have to wait to the closing. So tell me a little bit about those options.
I'm glad you brought that up because it's really a valuable piece of our business model for the homeowner experiences. So from the moment that they're contemplating putting the house on the market, we can be a resource to spruce it up, get it ready, fix things so that it's ready to go to market. Then once they're in that sale process and they go through their home inspection, typically there's something that they'll be asked to fix, and if they have to fix it, we can facilitate that as well. And then once they start that process of transitioning from one home to another, there's things like getting your cable set up and your internet and your security systems and your keys changed and your carpets cleaned and your TV's hung, and just getting you settled into that new home. We facilitate all of that. And again, there's no service charge, there's no fees, there's none of that stuff. It's just whatever that charge is by the service provider is all they pay.
So there's not any kind of like middleman charge or surcharge or anything for using Househappy because the subscriptions are technically covered by us.
Correct.
So when we've got the relationship with your platform, the consumer benefits.
Absolutely.
So it truly is a free gift to that client.
Yep.
So I think that from a marketing director's perspective, I think it's brilliant.
Thanks.
Especially if the loan officer opts to have their branding included, because then that just benefits the client even more, because it's just one more piece of content, a consumer might say, it's one more piece of junk mail. Well, it's really not. It's every single item, every single piece that you guys send out to people who, whether they opt in to actually using your platform or not, until they choose to unsubscribe from those emails, they're actually leaving money on the table, because there's always some kind of very cool offer of get 35% off X service or something along those lines. And so it's not only a great way to track the maintenance and maintaining of your home, it's a great money saver
for sure
in terms of for those that like to clip coupons and whatnot.
So we're constantly reaching out. In fact, they're starting to reach out to us now because of our nationwide platform now.
Contractors?
Different types of service providers, whether it's cleaning companies or security companies or whatever.
That would be a big one.
We want they're saying we want access to your customers. Will you sell us your database? We're like, no, we will not.
That's not how it works.
So what we say is we have this many customers who could utilize your platform or utilize your service. What will you do for them? And so we're just passing on those offers.
There you go.
And so that's really one of the really big value propositions of us. And the service reminders that we do send out are curated to fit you and your home. And what we haven't talked about is the data, right?
Yeah.
So the data about your house. So how we capture that information, we have this cool new virtual app where we can send you the app. You can take photos and videos, and that stuff stores in our system.
Yeah.
So that we can then, when you dispatch, for example, a refrigerator repair, when that service comes in and it identifies that your refrigerator is 22 years old, and there's going to be a $129 service charge, there might just be the conversation that, is it better off to fix this 22-year-old refrigerator for $500 or whatever it's going to be? Worst case is they're paying $129 for have somebody come out and tell them they should get a new refrigerator.
Right.
And they've just wasted $129. So we might have that conversation early that says, is this really the best solution for it?
Right.
But by knowing the model number, the year it was made or year that was installed, we can then send information that's very specific to either the service pro or the homeowner that relates to them, and it's not, we're not sending you a chimney, time to clean your chimney reminder if you don't have a chimney.
Right.
Yeah.
Smart.
Yeah, we're not sending lists of what you should be doing in the spring because there's lists.
Yeah, and there's a gajillion other resources for that. Pinterest,
right,
for one.
Yeah, Google.
Google. Yeah. So it's really clever the way that you've set it up, and I love that you guys are kind of, I don't want to call you the police, but you're more the gatekeeper in terms of communicating with the client, so that they know, that homeowner knows that they are not going to get just bombarded and inundated with 1,500 emails from tree trimming services simply because they put that out there and say, hey, give me the lowest bidder. That's not how you want to handle proper maintenance of your home.
Right. Yeah. And the dirty secret that a lot of people don't know is these lead aggregation companies, if they don't monetize, or even if they're done monetizing, they then sell that lead to another lead aggregator. It's so that it just doesn't stop.
Yeah.
And so we just don't do it.
Yeah.
Period.
No, that's a cool asset, and it's one of the reasons why Thrive picked Househappy, because there are a number of platforms that are out there that offer services like this, but the way that you guys have it set up, I mean, we easily could have gone to one of those lead aggregators and said, hey, give us a relationship, here's our client list, give us some money. We feel the same way about protecting our consumers' identity, their privacy, and making sure that they're not getting bombarded. They get bombarded. I mean, mortgages are a matter of public record, so they're getting bombarded enough as it is.
Right.
And I mean, there's things that we can do to help educate them on how to prevent that. But you guys make that process. I mean, you just completely take that off of the consumer's plate, which I really appreciate.
Yeah, that's awesome. I appreciate the same. I mean, it's like we are like-minded,
yes,
right? And that's who we like to work with. Frankly, I mean, everybody talks about having relationships for life and being the trusted advisor.
I think I've heard that somewhere.
Yeah, but I mean, the reality of it is, many really care about just the monetization, the transaction that's associated with that relationship. And the companies that engage with us are the ones that really truly feel like they need to add value to that relationship, regardless of what happens next.
Yes.
And so I think I'm glad we're partners.
Absolutely. I am too. Well, Scott, it was a pleasure having you here at Summit. Glad you could make it. This is your second one to attend in person, third one that you've been involved in.
Yes, exactly.
So we'll make sure to make it 4 in a row. So
awesome.
Anyway, it's a pleasure chatting with you.
You too.
And safe travels going home.
Appreciate it. Thanks.
All right. Well, if you are a practitioner of the Househappy platform, or if you've signed up for an account with them, or have used it for any of the services that they can help coordinate on your behalf, then you know how great a tool that is. So if you are a client of Thrive's and you have not had the opportunity to engage with Househappy, make sure to reach out to your loan officer who handled your account. You can also shoot an email if you're listening to this and you're like, hey, I'd really like to check out a little bit more about this Househappy thing. Then shoot an email to us at Thrivenomics@thrivemortgage.com. And we'll be sure to direct your question where it needs to go and get you the right answers. So hopefully that helps you. Now, the last one of our partners that we took some time to interview is one of our favorite sales tools. We call it a sales tool here, but it's a great asset to any client or anyone who connects with Thrive. You don't even need to have to be a client of Thrive's in order to make use of this tool. Just reach out to us. Find a local Thrive loan officer, and they can get you hooked up with this particular platform. But the next interview is with our good friend Connor. It's Connor Parsons. He is our client success rep over at Homebot, and Homebot is a platform that allows you to track the valuation of your home over the course of time. And a lot of you are probably thinking now, dadgummit, I wish I'd had this thing 2 years ago. Well, it's not too late. You can still gain access to it. It's a free tool that we provide to our clients, as well as to those who are just interested in signing up for it. It allows you to track the value of your home over the course of time. It'll help you to track whether or not it's makes sense for you to do a refi. You can engage with the loan officer that you're tied to, who provided it to you, and you can message them real quick with just a tap on the phone screen. And you can shoot off questions like, can I get a CMA, which stands for competitive market analysis. So if you want to find out what a realtor thinks your home is worth, then just tap that button and we'll shoot us a message. If you want to do a total cost analysis report, you want the loan officer to put that together for you. You want to evaluate multiple different scenarios. You want to evaluate whether or not it's in your best interest to refi or to list your home and move up or downsize. Whatever you want to do, whatever questions you've got about managing one of the biggest financial assets that you have in your, and this is how you need to consider it. Owning a home is one of the single largest assets that you have in your investment portfolio. And you need to think of it as such. I think of it as an investment, and it's tied to what is probably the single largest debt. Unless you own your home outright, it's probably tied. If you got a mortgage, then that mortgage is probably your single largest debt that you have. And so we can help you manage that debt and that asset in a much more professional manner when you sign up for this tool called Homebot. So enough of me talking about it. Let's go hear from Connor what he thinks about it and what he thinks is so special and the value that it provides to a consumer. Connor, tell us a little bit about yourself. What do you do at Homebot?
Yeah, of course. So my name is Connor Parsons. I am the customer success manager, or one of the customer success managers at Homebot, and I have a direct relationship with you all to ensure that your loan officers essentially know what they're doing with their accounts.
That's a very important thing.
Yes,
so
absolutely.
If you are listening to this and you've never heard of Homebot before, this is obviously, Connor, this is a podcast that is geared towards consumers rather than just talking to the mortgage industry. So
okay.
Give our listeners a little bit of a preview of what Homebot, what the platform actually does for them.
Yeah, absolutely. So what a lot of people don't know is that 83% of retirement actually comes from home equity, and there really isn't many portals to help educate consumers on how they can continue to build wealth with the biggest asset that they're ever going to own, which is their home. And so here comes Homebot. Comes Homebot. So what Homebot is a portal for consumers to track not only their estimated value of their home, but also check in on their equity and understand all of the different opportunities that they have with that equity that they've built in their home. They have a purchase power module to kind of understand the current purchasing power that they have in their home, all the different investment opportunities. And then they can also take a look at different refinance scenarios. So if there's a refinance scenario that's going to help them save money in the long run, they'll be able to view that information as well.
Right.
Maybe they want to rent out one of their rooms for Airbnb. Maybe they want to bring in additional income. It's all designed for them to build wealth through home ownership and to see all of the various ways that they can do so. And what's really cool is that it's really engaging. So it's not just like an email that they're going to receive. It's when you go into this, there's tons of different modules. It's super educational. There's a ton of stuff that you can click on. So it's customizable too. So it's fun to engage with, and it's going to help educate them on, again, the biggest asset that they're ever going to own, which is their home.
I love the fact that you have the ability when it comes to engaging the valuation of a property. I love the fact that the consumer has the ability to fine-tune the valuation on their home. Because, I mean, not to necessarily call out any big name online real estate platforms that claim to have a very
I wonder what you're speaking
accurate
to.
Estimate of what a home's value really is. The consumer, through y'all's platform, the consumer actually has the ability to account for additions to the home, or a new deck out back, or just anything that they've done to the house that's going to account for an increase in value. And so they have the ability to go in and fine-tune those numbers to get it more accurate, so that the rest of their digest, the rest of the information that they're being provided by the loan officer, is that much more accurate and able to forecast more accurately into the future. So,
and algorithms can only go so far,
they
right?
Can. Yeah.
So what's great about Homebot, as you were talking about, is that clients can actually go in. They have a button to tune their value.
Yep.
And so, as you're saying, if there's updates that they've made to their home, no one else is going to know that but the homeowner. Loan officer may not be aware. The real estate agent may not be aware.
Sometimes even appraisers miss it.
Exactly. And so what's cool about it is that you can go in, you can tune your value, and then you can mark all of the updates that you've made. So if you've added a half bath, if you've renovated your basement, if you've added a deck. You can say all of those things to let your loan officer or real estate agent know, so that way your report is a little bit more accurate, and they can reach out to you if they have any questions about those renovations that have been made.
Let your realtor or loan officer know. That's another component of your platform that I really love, the engagement of what it affords the consumer. If they had, there are so many different I don't necessarily want to call them calls to action, but there's so many different opportunities within the digest for the consumer to engage with either the realtor or the loan officer in their transaction, whoever it is that's connected them to that platform, and just say, hey, is now a good time to refi? I mean, just by tapping a button, it sends the loan officer the text, is now a good time to refi? Should I consider a renovation loan? Can I get a new total cost analysis from Mortgage Coach, who we just had on right before you? So, I mean, it's just one of those things where it just puts so much power in the hands of the consumer.
And what's really cool about that too, it's like we understood that this is going to generate questions. They're going to get curious. They're going to start to see things that they may have not been familiar with beforehand. So we wanted to make it incredibly easy for any consumer to get in touch with their trusted financial advisors. So if they want to get in touch with their loan officer or their real estate agent, it's super easy for them to do so. So that way they can ask the right questions at the right time and have their trusted partners there to answer those questions.
What do y'all see as far as enhancements to the platform that are coming down the road? What are some things coming for consumers to look forward to?
So I think that there's going to be a lot of advancements in regards to the buyer's side of Homebot. So we understand that this is going to be more of a purchase season, and so we really wanted to double down on that aspect of the platform. So there's going to be a lot of enhancements to look forward to there.
Very nice. I love the fact that it doesn't matter if they are looking to purchase new or looking to refinance where they are, or they just want to keep tabs on how much equity they're building over time. I love the fact that there are so many powerful tools available to them, not just the messaging or the engagement with the loan officer, but they can also go and do a search just like they would on any other home search platform, where they can go and see what other homes are going for in their neighborhood through the integration with Ylopo.
Exactly. It's meant to be just as much as we wanted the homeowner's side to be educational. The buyer side is as well. They get to understand when it is the best time for them to buy within whatever markets that they're interested in. And so within that buyer side of Homebot, the reports that they receive breaks down all of their markets of interest, lets them know how much square footage they can afford in that area, what the moving timeline is like in that area. So again, that way they can make sure that they're essentially buying a home in the market of interest at the right time.
Very cool. Well, Connor, we're so thrilled that you guys were able to be a part of Summit this year.
Thank you so much for inviting me. This has been awesome.
It's been a great partnership, and you guys have been fun to hang out with. You did an awesome job in the workshop educating our loan officers. I just want to say that. So,
thank you. I appreciate that.
Absolutely. So we'll make sure to tell your bosses.
I'll relay the information.
You're a very, very good ambassador for Homebot. So anyway, it's great getting to see you and meet you finally face to face. And
likewise,
we're definitely going to have you back in years to come.
And thank you for getting my name right. I appreciate that.
You're very welcome, Jason. Nice to have you on.
Oh, no, don't do that to me.
I'm just kidding. Thanks, Connor. Appreciate your time.
Of course, James. Thank you.
Well, as you can tell from all of these interviews, we had a lot of fun with our partners, and I mean, we just had a lot of fun at Summit. I mean, it was a blast. It's always fun getting together, seeing people face to face, getting to hug some necks, and seeing a bunch of faces that we just haven't gotten to see in person for way too long. And so it was a great time had by all, and especially having all of our partners there. So if you've got any questions about any of these platforms, any of these services we provide, we would love to connect you with a local loan officer who can give you all the information that you've got or that you need, and answer every question that you have. If you are a loan officer or a mortgage industry professional and you're like, you know what, that looked like a lot of fun, I think I need to check out this company and find out a little bit more about them, we'd love to talk to you about that as well. Either way, would love to hear from you. Send us a note at Thrivenomics@thrivemortgage.com, and we'll get you all squared away with whatever answers to whatever questions you've got. But for now, we're going to sign off. I hope that you've enjoyed this episode and kind of getting a little behind the scenes glimpse at what went on at Summit. And And we look forward to seeing you in episode 2, which we plan to drop very, very soon. And we're going to do a much better job. Raul and I have already committed that we're going to be doing a much better job to putting out some great episodes for you on a much more consistent basis than what we did in 2021. So anyway, with that being said, we're going to sign off for now, and hope you enjoyed listening in, and we'll see you on the next episode. Bye, everybody. Thank you for listening. We hope you enjoyed today's episode. The title sponsor for Thrivenomics is Thrive Mortgage. Licensed in multiple states across the U.S., Thrive Mortgage employs the best professionals, equipped with leading technology and the most efficient process to deliver a legendary lending experience. For more information about how we can serve you, or to find a local Thrive Mortgage professional in your area, please visit us at Thrivenomortgage.com. You can also contact us directly via email at Thrivenomics@ThriveMortgage.com. Thrive Mortgage is an equal housing lender, NMLS ID 268552.